last week I did a market breakdown on EURUSD. I was expecting the market to continue pushing to the downside after giving me that break-off structure at that point, but the market didn't play out as I had expected. Instead, the market gave me about 31 pips before reversing and taking out my entries. But if you are a scalper, you could have taken advantage of these and you could have profited out of this analysis. So I want to do a market analysis and try to understand what I could have done different and why I did take these losses. So as obvious, you can already see I did not delete my analysis from the previous week. So I'll go to the bigger time frame and show you what I was looking at in the market before I decided to come back to the 1 hour time frame and decide to take a sell entry. So I'm going to start from the weekly time frame and try to understand from the weekly time frame what I saw from there. Then go back to the one day the daily time frame. Then after that I go back to the 4 hour 1 hour time frame where I did take my entries. So from the weekly time frame, this is what the market was showing us. The market was showing us that we had a big impulse move from this area up here. Then after that we had this correction. So from the weekly time frame we were on this kind of correction, but this correction when you go to the daily time frame, this is a bullish market. So after seeing something like this, I went down to the daily time frame. And tried to understand the immediate action of the market at that point. So as we are looking at the market right now, we had our first touch there, our second touch at this point. Then I didn't wait for this third touch, and that's one of the mistake I did make in this entry. So one of the mistake I did make in this entry is let me just do this. Let's just write down the mistakes we could have avoided that did cost us these kind of losses, so that next time we never make these kind of mistakes again. So one of the mistakes I did make is I didn't wait for the third touch. I could have waited for this market to come all the way up here. Then after that, I see how the market reacts around this area. Then I'll go down to the lower time frame and take my entries from there. But instead, I took my entries when the market was around this area. And as you can already see, we had some kind of gap that the market was expected to fill before it continued pushing to the downside. So let me go to the 4 hour time frame and see what the market was doing there. From the 4 hour time frame, last week the market was at this point. When I woke up, the market was at this point. That was about 7th May, about 9 a.m. from my time over here. So I saw this market was on a bullish trend. From the bigger perspective, from the 4 hour time frame, the market was on a bullish trend. But I saw the market did come, gave us this first touch. We had the second touch, third touch. This was just actually a fourth touch up here. So after that, I saw this market started giving us this some kind of consolidation. Then I was looking for this market. Maybe I was expecting this market to break below this area down here that it had already created. Then after breaking below this area down here, So I was expecting the market to continue pushing all the way to this area down here, but that's not what happened, guys, because there's some areas that I didn't take into account. Let's look at these key areas that I didn't take into account in this trade. Like this one, this was the first area that I could have looked at. So this is the first area that I could have taken into consideration before taking my entries, or before setting my take profit, because as you can already see, this area was a very strong support area. This was a very strong support area that the market had already respected so many times, and you can already see the market had already respected this area for so many times. So this became a very, very, very strong support area. So the moment the market came to this area, it respected it immediately, because this area hadn't been tested before. And that's to confirm that when you see in the market that an area has not been respected or has not been tested, which means there's high probability that that area is going to hold in the market. So that's exactly what the market did here. The market came down to this area, gave us that big candlestick. And actually we'll try to understand from the fundamental analysis what happened, because at the same time we had jobless claims that was coming out the same day. So it did propel the market to the upwards. So what did I see before taking this trade? I go down to the 1 hour time frame, because I've already told you I was expecting the market to break below this area. Then after breaking below this area, I started looking for my entries. Then when I went to the 1 hour time frame, I found out that the market had already broken below this area. This is the second mistake that we did here. I didn't take into account this support area. So maybe I can just write it, or to save time I may not write it. Or let me just write it. So I did ignore this support area. This is another mistake that I did take. So we're not gonna repeat this again. So I did ignore this strong support area, as you can already see, where the market did came to this area, tested this area, then it failed to break below, then it continued pushing to the upward. And actually, as you can already see from here, this was some kind of we had this impulse move correction. So I was selling in a correction, which is very wrong, which is very, very wrong. I should have seen that. So if you can draw this like this, let me just clone this from this point, then I show you this correction that we were having. This is an impulse move that we had from the smaller time frame, from the 1 hour time frame. So this is an impulse move that we did have from the 1 hour time frame. After having this impulse move, so what the market was doing here, the market was giving us a correction. Then I didn't see that kind of correction. I thought that the market now has broken below this support area. Now we're going to push downwards, but as you can already see, this area was very strong. The market actually came down here, gave us a double bottom, which I should have looked at. I did ignore this double bottom. There are a lot of things that we did ignore in this market that did cost us a lot, and next time we're going to make sure that we don't miss out on this. That's why we go back to the entries that we have already taken, or the entries that we have already taken losses, and try to understand what we did wrong and so that in the next trade we try to avoid that. So another thing I ignored is this double bottom, and as you can already know, double bottoms, double tops are very, very powerful when it comes to trading. So I did ignore this double bottom, of which it was a very big mistake. I'll also show you what I did before taking my entries. So the first thing I saw, the market did break out below this area. After breaking out below this area, I waited for the market to go back and give me a retest. After giving me a retest, so I was waiting for this market to give me some kind of bullish, bearish engulfing candlestick, but I didn't wait for that. I didn't wait for a bearish engulfing candlestick. But regardless, after taking my entries at this point, still we went straight into profit because the market straight gave me about, let's see how many pips we go here. So after taking my entry from this point, the market gave me straight about 20 pips. So if you're a scalper, you know, if you're a scalper, 20 pips, you should just take it and just go home. But I wasn't planning to scalp on this trade, so I was expecting this trade to give me about 105 or 149 pips. So still I was holding, not knowing that there's an area that I was ignoring at this point. So the market came down here, gave us this correction from the lower time frame. As you can already see, I'd taken my first entry at that point. Then the market came down here. After coming down here, went up. When I looked at this structure, I saw that this market is giving me a correction. So after seeing that this market is giving me a correction, I waited for this market to break below. I waited for this market to break below this area down here. I waited for this market to break below this area down here. Waited for that retest. Then I took my entry at this point. After taking another entry at this point, the market did push down to this area. So if I was a scalper, I could have taken my take profits at this point because this was about 20 pips. Then this is another, let's see how many pips were here. Let's see how many pips we did get here. So this is another like 21 pips. So the market had already given us about 41 pips, and guys, I did take a loss in this market because I was greedy. I was expecting the market to continue pushing all the way down. So in this entry, I was expecting to take my first take profit at this point, probably. Then after that, the market continued pushing all the way to the downside to this area, but that didn't happen. So another thing that did happen that I didn't look at is we had economic data that was coming out that day. And normally, guys, when trading EURUSD, GBP USD, gold, you should always be keen on economic data that is normally coming out. You should always be keen on things like CPI, jobless claims, FOMC, NFP. Those are very, very volatile times. So I didn't look at my FX book, so, and that did cost me. So make sure before you take your entries, you look whether we have economic data coming out in that particular day. So if you find out that we have economic data that is coming out in that particular day, and when you look at the my FX book, they normally indicate high frequency or high impact data as red. So whenever you see on your my FX book app that they have indicated that data that is coming out is red, that means that data is going to be to have a very, very strong impact in the market. So you should stay out of that market if you don't know to trade. If you don't know to trade fundamentals. So after the market coming out, it gave us this big bullish candlestick up here. After the market coming out, it gave us this big bullish candlestick up here, and that means that the dollar was now weaker. After the dollar being weak, now the market did give us this bullish, and it continued pushing upwards, going all the way to this area. We'll go back to the bigger time frame and try to understand what the market is doing, but for now I'm trying to look at the market and trying to show you what I did wrong in this market, so that whenever you find yourself in a situation like this, you don't make these kind of mistakes. So as I've already told you, there was a double bottom at this point. Let me go to the 30 minutes so that you can see it clearly. Let me go to the 30 minutes. I think it's very clear from the 30 minutes. So if you could have seen this double bottom at this point, this is another sign that this market probably wants to push to the upwards. So I did ignore this double bottom because the market did come broke above this area. So after the news coming out, the market did push all the way to that area, and I didn't close my entries because I was expecting how the market will continue pushing downward. Let me show you the reason why I didn't close my entries. Let me show you the reason I didn't close my entries. So there was another key area around this area. From here, we can see we had this resistance above this area. We had this resistance here where I put my stop loss. So when I saw that the market has already pushed all the way to this area, I had this resistance above here. So I thought that I'm secure, that the market won't be able to break above this area. And normally, guys, never take assumptions when trading. You only react to what the market is giving you, never predict. You only react to what the market is giving you. And what I did at this point was a big mistake. I was expecting now the market won't be able to break above this area. I was supposed to look at this area at this point here. What is the market doing after giving us this impulse move? Normally, we do understand that after the market giving you an impulse move, the next thing you should expect is a correction. Then after a correction, the market probably will continue pushing to the direction where the impulse move was going. So when you look at this market, the market gave us this impulse move from this point after the economic data. Then after that, we had this correction. We had this correction above here. After that, we had this correction. Let me just do it just like this. So the market gave us this correction. Whenever you see this correction, another name for this correction, we can call it a bullish flag. Some call it a bullish flag. So whenever you see something like this is a sign that the market will continue pushing to the upwards. I should have taken closed my entries earlier at this point, but I didn't because I was expecting the market to continue pushing to the downside, which is another mistake. I did ignore this bullish flag. This is another mistake I did at this point. I did ignore this bullish flag. So guys, whenever the market has given you an impulse move and has already given you a bullish flag, that is a continuation pattern. Whenever you see a bullish flag, that's a continuation pattern. So I could have seen this one and realized that this market will continue pushing to the upwards because it's giving us a continuation pattern. But I did ignore that, which was a very, very great mistake. Another thing that this market did at this point, let me now just clean my chart. Let me just clean a few stuff from this chart so that it can be clean so that you can see it. So we had another key area, a very important stuff that I want to show you right now. So let me just take my rectangle and draw it from this point all the way to this area above here. And when you look at this is an inverse head and shoulder. And guys, from my previous videos, I told you whenever you see an inverse head and shoulder, that's a continuation pattern. That means that that market will continue pushing to the upward. So we had so many signs here that this market is not going downward, but still I was holding, which was a very, very bad mistake. I mean, you should never do that. But probably I'm never going to do that again in my next entries. So that's why I normally go back to my entries and try to understand what I did wrong in that market that did cost me those few bucks, so that I never repeat that in my other entries. So as you can already see, the market did give us this inverse head and shoulder. Right now what the market is doing, it has already broken above this neckline. So after breaking above this neckline, probably we expect a pullback to this area. Then after getting a pullback to this area, if the market doesn't break below this area, then we'll expect the market to continue pushing all the way to the upwards. But you should take your first take profit at this point. Take your first take profit at this point. That's about, let me see. That's about, because this is our first immediate high that the market has formed at this point right now. That's about 15 pips. For scalpers, that's okay. But for day traders and swing traders, you just ignore that and continue holding. But again, you should never ignore these areas. Whenever you see reversal patterns in a market like this, don't ignore them. So this is what I'm expecting this market to continue doing. So we had our first touch here, second touch. So probably what the market is doing, it will come down, give us our third touch. Then probably we continue pushing to the upwards, because this is a neckline from a bigger inverse head and shoulder. And whenever we see an inverse head and shoulder, that means that we're pushing to the, that's a sign that we'll be pushing to the upwards. So that's a sign for us to start looking for buys, because still the market is bullish from the daily time frame. So that's enough confirmation for us to start looking for buy entries in this market. So we'll wait for this market to pull back all the way to this area. Then after giving us a pullback all the way to this area, then probably we'll take our entry from this point. After getting a confirmation, we'll take our entry from this point. Then let me show you guys. So we'll wait for this market to come all the way to this area. As you can already, it's already pushing all the way to this area. Then it will give us some kind of confirmation pattern. What kind of confirmation pattern are we looking for? So maybe we'll get something like this. The market will come all the way down there. Let me use this drawing tool, this brush on me. So the market will come all the way down here, test this area, and maybe give us a false break, come back, give us a double bottom. Then we should be taking our entries after we see that the market has broken above that immediate high that it has formed at this point. So if the market does come and give us this double bottom, then we'll expect the market to break above this area up here. Then after breaking above this area with a 1 hour candlestick closing above that recent high. So if the market does come and give us this head and shoulder down here, then after giving us this head and shoulder down here, then we'll wait for this market to break maybe above this immediate high that is it has already formed, then we'll continue pushing to the upwards. Let me delete that. That's not okay. So give us that kind of structure, break above that area, then now we continue pushing to the upwards up to this area. So this should be our last target, because this is another resistance area that we should not ignore. So after the market breaking up above this area, we should expect the market to go all the way to this area. Then we should look what the market will do around this area. So if the market does give us some kind of structures like this, the market comes around this area, then you start giving some kind of correction. Maybe let me draw it in a nice way. Market pushes all the way that way, then we start having some kind of correction just like this, like that, like that, like that, like that. So whenever you see something like this is a sign that this market has a high probability of breaking above this resistance area, because it's giving us this correction, which is a bullish flag. And whenever we see a foolish flag, we say that whenever we see a bullish flag, we start looking for buy entries in the market. So if the market does come to this area and start giving us structures like this, then we'll be expecting the market to break above this area. Then now we'll go bullish in the market. But if the market doesn't do that, then this is what I expect the market to be doing. If the market doesn't do that, then we'll be looking for reversal patterns to the downside, because as we can already see, as I already showed you from the daily time frame, let me show you again from the daily time frame. This is our third touch. This is our third touch that we are approaching at this area, because we had our first touch. Let me make it just clean and easy for you to see. These ones, you've already seen them. I'll just delete them, delete that and that, and probably that, this and that. So if the market does come to this area, this is another third touch. If the market does give us this third touch and fails to break above this area, then we'll expect the market on maybe the 1 hour time frame to break below the immediate low that it will have formed, just like this. Let me show you. Let me go to the 1 hour time frame and show you what I expect the market to do before we start looking for maybe sell entries now in the market. So this is where we are in the market right now in the 1 hour time frame. We're still bullish. So I'll expect the market to come all the way to this area. Maybe after giving us that impulse move to that area, then we break above that area. After breaking above that area, we have some kind of structure like this. Then if that's what will happen, then we'll expect the market at least to break below this area. Then after the market breaking below this area, now we can start looking for our sell entries in this market. So that's all about for today, guys, and thank you for watching. See you in the next video. This is Profit and Night signing out.